gold is just simply a neutral asset. In time of war, you don't have to worry about who wins. All right. So that's why China's been dumping U.S. bonds and moving more into gold, and they've been dumping Europe. Why? If there is a war between China and the United States, they're not going to pay on that debt. They default. They know that. This is what happens. Okay. So China has been moving more towards the gold side. China was dumping the 30s and moving to 5. So yes, there was no inflation because the money went exported out of the country. So we live in a much more interconnected global, world economy. And the theories that people still espouse are from the gold standard when currency was never an issue.
The global financial system is facing unprecedented structural pressures as old economic paradigms clash with modern geopolitical realities. Central banks worldwide are quietly shifting their strategies away from traditional Western debt instruments to shield themselves from escalating systemic vulnerabilities. Martin Armstrong, a renowned economic forecaster and creator of the economic confidence model, emphasizes that gold is acting as a strictly neutral asset in this climate. He argues that major powers like China are systematically dumping U.S. bonds and European debt to protect their reserves ahead of potential military or economic conflicts, knowing that a direct confrontation would trigger immediate sovereign defaults. Looking further into the future, a massive and inevitable reorganization of global governance frameworks is rapidly approaching, with a definitive breaking point projected to arrive right after 2032. This monumental migration of capital underscores a deeper, interconnected global economy where historical theories based on the rigid gold standard no longer apply. As nations grapple with structural dependencies, the global financial landscape is rapidly shifting toward decentralized safety nets. Now, we present the clips from Martin Armstrong's interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you and enjoy the video.
We're looking at a major reorganization of governments. It's coming, by most likely after 2032. What does that mean? It means the Republican forms of government we have. Republics are the most corrupt type of government. All right. So, I've said before, I could run for Congress. I'll tell you whatever you want to hear. I'll save the whales. It won't rain on Sundays. Whatever you want me to say, I'll say. Then I get to Washington. Day one, there's a meeting. They say, congratulations, glad you're here. This is how it works. And then just look at the votes. They're all down party line. So I could say whatever you want me to say to get elected. Then I get there. I can't vote for any of that. All right. If you don't play ball, the Speaker of the House is the one who decides who gets on what committee. And I know when the Bonner during the Tea Party, he removed people. I know because I spoke to some congressmen. They removed them from any committee that had anything to do with finance because they supported the Tea Party. This is the way this really works. All right. The fact Europe is going full born into the whole digital lockdown. Why? Because they never consolidated the debts. They have a serious problem economically. All right. And you see them going after free speech, everything. UK is just seizing control of YouTube now, censoring whatever's on there. All right. So you might not be able to be on YouTube in the UK in the future. So this is part and parcel of it. Now, the U.S., because of the Constitution, the Federal Reserve cannot do a CBDC. It would require a search warrant to look at your account. So what are they doing? You mentioned the stable coins. This is the same model as Abraham Lincoln. To fund the Civil War, he created national banks. The national banks could issue their own paper money. You can buy them, use all different bank notes that you can buy on, as a collector. And they had to be backed by U.S. debt. So they bought the debt to fund the Civil War and were allowed to issue currency against it. That's a stable coin. You can issue a stable coin, but you got to buy government debt to back it. All right. So it's always the same theories regurgitated. It's the characters may change, the names may change, but it's always the same thing. They're doing that because as you go into a debt crisis, they have concerns about selling debt. They need a new customer. For example, I warned them at the Fed that quantitative easing would never work. Why? Because these people are doing all the economic theories. They're all wrong anymore. They're bogus. All right. I'm doing a conference in Tampa on July, 25th about this. All the theories from quantity of money, you name it, all bogus. Why? Because they were formed during the gold standard. Currencies were fixed. So currency was never considered as a variable. Then you have like central banks and, they were buying gold. People, they try to make it look like, they think gold's going to go up. No. Okay. Gold is just simply a neutral asset. In time of war, you don't have to worry about who wins. All right. So that's why China's been dumping U.S. bonds and moving more into gold, and they've been dumping Europe. Why? If there is a war between China and the United States, they're not going to pay on that debt. They default. They know that. This is what happens. Okay, so China has been moving more towards the gold side. And with the quantitative easing, why I said it would fail is, again, it's domestic ideas. When we buy in the 30-year bonds, that will lower long-term interest rates and help mortgages. Sounds nice. You're assuming with that you're buying them from an American. I warned them. Most of your 30 years are outside the country. Okay. China was dumping the 30s and moving to 5. So yes, there was no inflation because the money went exported out of the country. So we live in a much more interconnected global, world economy. And the theories that people still espouse are from the gold standard when currency was never an issue. And sometimes, honestly, you take a look at Tokyo, 1989, goes up, but then plot it in dollars. If you were a dollar investor, you made almost twice as much because the yen was going up. 1929, it was the dollar going up, also with the market. If the dollar is going down 20% and the market went up 20%, a foreigner breaks even. He didn't make any money. But you get the currency going and the market. Everybody comes in.
Europe is moving aggressively toward comprehensive digital lockdowns and strict censorship frameworks to manage its unresolved, unconsolidated sovereign debts. This creeping authoritarianism directly threatens free speech, with nations like the UK asserting absolute regulatory control over massive digital platforms. Unlike Europe, the United States Constitution explicitly prevents the Federal Reserve from unilaterally implementing a central bank digital currency without localized search warrants, forcing them to rely on alternative frameworks like stablecoins instead. This regulatory approach mimics Abraham Lincoln's Civil War strategy of authorizing national banks to issue currency, provided it was backed exclusively by government debt. Central banks are desperately seeking fresh clients to absorb their liabilities as traditional economic models collapse under the weight of compounding interest. Now, let's get back to the interview.
The real strength of the dollar isn't oil or anything else. It's the fact that the U.S. has the largest consumer-based economy. So Japan's got to sell its Toyotas to Americans. Germany's got to sell its BMWs, Mercedes, etc. That's the real strength of the dollar. If you look at oil, just Google it up. What percent of energy is the world economy? It's like 6%. It's not that much. And I just did a report, which has kind of blown the doors off of a lot of people because they didn't know. But effectively, the debt crisis may actually start in the Middle East. During COVID, oil went down to $6.50. So what happened is the Gulf states had to borrow extensively to survive. And Iran, we have an office in Dubai. Everybody's in Dubai because largely when Switzerland went and attacked, confiscated money from Russians saying, oh, you knew Putin. Of the 300 billion that's been seized in Europe of Russian assets, if you really go through it, you'll see the bulk of it is private individual houses, yachts, things of this nature. It's not government assets. All right. So what happened was Switzerland has shot itself in the head. And the capital moved to Dubai and some went to Singapore. So they built a $30 billion AI facility in Dubai. This is why Iran sent more missiles and drones at Dubai than they did Israel. They did attack the AI complex. They didn't destroy it, but they damaged it so that it was offline for about a week. What happened was the banking system went down. We couldn't even get wires to our staff there. Now, the Strait of Hormuz, Iran knows this is not 1970. U.S. is virtually self-sufficient. So it's not something against the U.S. per se. However, the energy shortages impact Asia and Europe. In addition to that, it's not just sending oil prices up. All right. What they're doing is that mainstream press doesn't even want to talk about. They are also attacking some of the refineries. Now, if the Gulf states cannot even fill the tanker, they can't pay their debts. So they can't pay their debts. They set off a sovereign debt crisis, which leads straight to London, okay, and impact Europe. So it's much more deeper than people realize. Iran, most people don't realize, they're not Arabs. They're Persians, which are basically Caucasian. Sure, there's some Arabs that infiltrated there. I mean, I dealt with, back in the 80s, I dealt with the Iranian counter-revolutionary people. And when they walked in the office, I looked at them, I thought they were Irish. They had red hair. I mean, huh? So they're not Arabic. And so that's one reason why they're counter to the Gulf states. There is an ethnic difference there. So they're like the third wheel in the Middle East, in a way. So you're looking at a financial crisis which they can spark. Europe, as you know, I was called in when we're creating the euro, and they made a fatal mistake. It was Helmut Kohl, who was the Chancellor of Germany at the time. He didn't allow the German people to vote on joining the euro. So he took Germany in unilaterally. What he did was he thought the German people would object to a consolidation of the debts, to be bailing out Israel and Greece. So he said he'll go in, but no consolidation. I warned them, euro's going to fail. You'll never compete with the dollar. As a trader, all right, I can pick up the phone, say, buy me $10 billion worth of U.S. treasuries. No problem. Okay. I can't do that with Europe. I still have to make the same decision as if the euro didn't exist. Do I want Germany? Do I want Italy? Do I want France? You're still buying individual countries. Okay. If California went bust, for example, I mean, I've spent my life, in trading rooms. What's going to happen? The traders will immediately say, who's next? Oh, Illinois. All right. So you would set off a contagion. That's what happened in 2010 when Greece got into trouble. They immediately said, oh, who's next? Oh, Spain. All right. So that's the vulnerability of the euro, that Italy right now is in trouble. Its economic growth is 0.5%. I mean, it's not even 10% of the U.S. All right. I can tell you that they secretly petitioned Brussels to issue federal European debt to give them money because they're having difficulty selling bonds. Now, the sovereign default comes because all these governments, why? They just borrow year after year with no intention of paying anything back. So the debt is just money that pays interest. That's it. Okay. It would have been cheaper had they just printed the money they needed at the time. Instead of paying, we're still paying interest on World War I. That's why the interest expenditures, have gotten to $1 trillion in the U.S., which exceeded military. Eventually, it crowds everything else out. That's when the sovereign default comes. During the Great Depression, over 200 cities issued their own money because there was such a shortage of federal money. So, we have serious problems on this debt thing. And I don't see any country interested in dealing with it. So Europe has a choice. They either create war with Russia or if they default.
Modern republican forms of government have devolved into highly vulnerable systems driven entirely by rigid party lines, legislative gatekeeping, and political corruption rather than public interest. This systemic rot is accelerating a massive global sovereign debt crisis that could violently spark from escalating financial strains within the Middle East, directly impacting financial centers like London and Brussels. Western nations continue to borrow trillions of dollars year after year with absolutely no intention of paying it back, creating an unstable environment where compounding interest expenditures systematically crowd out vital domestic functions. This unsustainable path will ultimately force European governments into a brutal final ultimatum. They must either actively instigate a direct war with Russia to clear the economic slate, or face a catastrophic, system-wide sovereign default. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.